Welcome to Limitless Solutions Financial Group. My name is David Rhodd, and as you know by now, we are a mortgage and investment company. Our job is to find you the best mortgage with the best rates that's going to suit you and your family. But that's the easy part, right? What you may not know yet is how we're going to leverage that mortgage to help you get to the next level financially. We're going to help you save some taxes. We're going to help you pay off some debts. We're going to help you save for retirement earlier. We're going to help you pay off that mortgage as fast as possible and help you build generational wealth. By the end of this video, you will know how to turn your Canadian mortgage into a tax deductible mortgage, saving you some taxes. You'll learn how to pay off your mortgage in as little as 10 years, and you'll learn how to earn a double-digit return securely. These three things combined will help you to build generational wealth. To build generational wealth, you need to know these three things: how to pay the minimum amount of tax legally, how to make our sleeping equity work better and harder for us, and how to pay off our mortgage faster in as little as 10 years. So let's begin. How do we pay the least amount of tax legally in Canada? The first thing is you need to have more tax deductions. And one of the ways how you can have tax deductions is by owning a small business. Once you own a small business, you have income, but you're also able to deduct things like your cell phones and your dinners and stuff like that, as long as it's related to your business. I would suggest that you speak to your tax accountant about the opportunities in opening a small business and how that can help you generate some tax deductions. The next strategy, not many people know about this. It's how to turn your biggest asset, which is your home, and the mortgage that you have against your property into a tax deductible mortgage. Some people know the strategy as how to make your mortgage tax deductible. Some people call it the Smith Manoeuvre. But either way, it's about how to turn your Canadian mortgage and have it be a tax deductible mortgage like our brothers and sisters in the United States. We are not in Canada. Our mortgages are not tax deductible, but they are elsewhere in this world. So how do we do it in Canada legally? So first, you need a specific mortgage product. It's a specific mortgage that is not offered by many lenders. So this product is called a Readvancable Mortgage. Now with the Readvancable Mortgage, it's a little bit different than probably what you're used to. You're probably used to that fixed mortgage that you pay every single month or bi-weekly, and it goes down and you take 25 years to pay it off. How the Readvancable Mortgage works is you get a fixed mortgage, but you also get a line of credit. As you pay down your mortgage, your line of credit increases. So for this example, let's talk about having a mortgage of $400,000 and your line of credit is at zero. So we have a $400,000 mortgage. You made a mortgage payment of $2,000. That dropped your mortgage balance to $398. On this side, your line of credit increased by $2,000, giving you $2,000 of room. Now you take this $2,000 and you pull it off of your mortgage, your line of credit, and you invest it. Just by doing that one thing will create a tax deduction for you, because whenever you're borrowing to invest, the CRA says that you are able to write off that interest that you're paying on the line of credit. So for example, if you're paying 3% or 4% or 5% interest on that line of credit, when you borrow to invest, you're able to write off that interest that you're paying as a deduction. And what did we say earlier that deductions do? Deductions is what help us to pay the least amount of tax legally by lowering our income. So now you take this money, you're investing it, it's making money for you, and we're going to talk about that a little bit later, but it's out there making more money for you. And every single time you make a payment on your mortgage, another $2,000 will be transferred over to your line of credit that you can now take and invest. And if you can just imagine, you just keep doing this process over and over and over again, and eventually that $400,000 mortgage that we spoke about will become zero, and you'll have a line of credit that is $400,000, and that $400,000 is invested, making money for you day after day. So now let's talk about sleeping equity. And what is it? So we just spoke about having a $400,000 mortgage, and every time you make a $2,000 payment into your mortgage, it frees up $2,000 on the line of credit. So just by having a mortgage of $400,000, let's say the property is worth $1 million, you would have $600,000 worth of equity. And in most cases, you are doing nothing with that $600,000 worth of equity. And that's why we call it sleeping equity, because it's not doing anything, and we need to wake it up and get it out there working for us and making us more money. So how do we do that? So we spoke about having that Readvancable mortgage, right? And we have available to us a line of credit. So we put you with one of our preferred lenders that offers this product, and that gives you access to your equity. Now let's just say we're not going to start with $600,000 of equity right away. We're only going to pull out $100,000 worth of equity, right? So if we pull out $100,000 worth of equity, on average, that's going to cost us about $500 a month. Okay, $500 a month is $6,000 a year. Now, but if we take that $100,000 of equity and we invest that into something secure, which we recommend private lending, real estate investing. You may be a stock person, so you can do stocks if you feel educated and strong in doing that. But what we recommend is real estate investing and private lending. Now with private lending, we're getting investors double-digit returns. So based on $100,000 being invested in private lending and getting 10% a year return, that $100,000 would make $10,000 a year. And remember, we spoke about how much does this money cost you. So this money costs you $6,000 a year, but you're making $10,000 a year, right? So once you take away your expense of $6,000, because that's what it cost you, which is also tax deductible, you'll be left with $4,000 of profit. That's how you wake up your sleeping equity. That's how you send it out there to work for you and work hard. So what is private lending, you may ask? Private lending is when you lend your equity, your cash, your TFSAs, RSPs, you lend it to other people like the banks do. You lend it to them as a mortgage registered against their property. So instead of having all your equity sitting in one house, you can take out $50,000, $100,000, you can lend it to someone. It'll be secured against their property, just like a mortgage, as your mortgage is on your property. The same rules apply. If anything goes wrong, it can go into default and you can claim back your money because it's secured against real estate, right? So instead of leaving all of your equity in one property, why not diversify it? Why not take out some of that equity and put it in different provinces, different cities? So in the event anything was ever to happen to the real estate market, you are fully diversified. So does that make sense? So by you investing your equity at 10%, making an extra $4,000, you will get monthly checks every single year. So now let's talk about how to accelerate paying down your mortgage from a 25-year term to sometimes even a 10 or 15-year term by not making much changes in your lifestyle. First, again, we have to have that readvanceable mortgage that I spoke about. Then, the way how the readvanceable mortgage works with specific lenders, they allow you to take your paychecks and deposit that into your mortgage. So let me explain how most Canadians handle their financial affairs at present. Currently, you get paid from your employer. That goes into your checking account. From your checking account, you have all your bills that you pay. You throw some into savings. Your checking account, you're not earning any interest on it. And then you pay your mortgage from your checking account. So what we want to do now is we want to change things to make it work in your best interest. So now that you have this readvanceable mortgage, if let's say you get paid $10,000 a month, just to make the numbers clear and easy. We talked about having a mortgage of $400,000. Instead of taking that $10,000 a month and putting that into your checking account, why not take that $10,000 a month and put that onto your mortgage? What happens here is your mortgage goes from $400,000 to $390,000. So what does that mean? You are paying interest on $390,000 only and not the $400,000. So that's a huge savings right there. Next, you're probably going to ask me, so how do I pay all my bills? How do I buy gas? How do I pay hydro? How do I pay all of my bills? What do I do? Well, we have these credit cards, and what these credit cards do, they allow us a grace period of 30 days. So if you use a credit card for 25, 27, 28 days and pay it off in full, you will have no interest to pay on that credit card. So you take as much bills as you can and put it on your credit card. Now, let's just say you have $5,000 worth of bills. You put all $5,000 worth of bills on your credit card as much as you can. Before those 30 days come up, you pay from your mortgage and pay that credit card off in full. So what you did there, you put $10,000 into your mortgage account. It dropped your mortgage from $400 to $390. You're saving tons of interest there on $10,000 for 27, 28 days. On the credit card, you're not paying any interest because it hasn't reached that 30-day limit. Now you're paying off that credit card in full, so there's no interest on the credit card. But you saved a lot of interest on your mortgage. Isn't that a better situation than what you're doing right now? Now, if you can imagine just doing this over and over and over again every 2 weeks when you get paid or every month when you get paid, effectively shreds your mortgage in half. Shreds it in half. So this is how we pay our typical mortgage from 25 years down to 15 or 10 years without changing much. And this is something that we can do as long as you have the right setup and we set you up with the right mortgage. So just to summarize what we spoke about today, we spoke about how to make your Canadian mortgage tax deductible. By making your Canadian mortgage tax deductible every single year, you're going to have tax deduction, which in most cases will create a tax refund for you at the end of every single year. Now, let's just say your tax refund was $1,000 or $10,000 every single year. It all changes depending on your personal situation. If you were to take that $1,000 or $10,000 and put that on your mortgage as a prepayment, that would also accelerate paying down your mortgage as fast as possible. We then spoke about how to pull out that sleeping equity and wake it up and send it out there to work for you. And we spoke about taking $100,000 to start, putting it out there to work for you in private lending or real estate investing, and it's going to cost you $6,000 a year in interest on that $100,000, but it's going to make you approximately $10,000. So at the end, you'll have an extra $4,000 of money that you didn't have to go and work for. Now, what if we were to take that $4,000 and put that on our mortgage as a prepayment? Again, that's going to help you to accelerate paying off your mortgage faster. Lastly, we spoke about instead of leaving your income all in your checking account, why don't you put that income on your mortgage, right? Because by doing that, you're saving thousands in interest year after year, month after month. And this will allow you to shred your mortgage. Now, I know I've shared a lot with you today. If you were to just implement one of these strategies, you would see a significant difference in your financial future. You would be paying down your mortgage faster, you'd be saving on taxes, and you'd be saving for retirement a lot faster. And isn't that what we all want? I know these strategies will work for you, but they're different for each and every one of us. Each and every one of us have a different situation, and these strategies have to be customized to work for you and to get you into the right products that are going to work. So I'd like to invite you to get on a strategy call with myself or one of my colleagues, and let's go through your situation and see how we can plug in these strategies to best suit you and get you to the next level financially. So don't delay, book an appointment with us today. I thank you for your time. It's so appreciated. Will I be speaking to you soon?